Hey everyone, this is Rahul with the Alternative Investors Hangout, and today we have a returning guest. He is Dawoud. He's over at wallstreetformainstreet.com. Thanks for coming on again, Mo.
Thank you for having me, Rahul. Happy New Year. It's been a while.
Yeah, thank you. You too as well. Okay, I wanted to look at the gold and silver market. Gold, you could say it's been rallying a bit after it's been beaten down. Same thing with silver. So where do you see gold and silver trading in the short term right now?
For the short term, I see a little bit of consolidation here for the first quarter, mainly because for what's going on with the debt ceiling and the fiscal cliff. I think that's putting a clamp on the gold and silver market, like it did back in when they averted the so-called fiscal cliff at the end of December. And once they made a deal, you notice that gold and silver went up a little bit after that. So I think for the first quarter, I think we're going to have a little bit more consolidation. While silver, we're hanging around the 200-day moving average, which is around $30, $31. It could, by the time the debt ceiling fiasco and the fiscal cliff fiasco is over with by March, I won't be surprised to see silver between $31, $33, and then after that, I expect it to take off because I know those people in Washington will raise the debt ceiling. They won't cut spending immediately, so that's good for gold and silver. So the next so for the silver chart, the next resistance is $31.70. And the major resistance is still $35. And once it gets past $35, it should get up to $37.50 around that area real quickly. And for the gold market, it's pretty much similar. The resistance is around the $1,700 area, and the next major resistance is $1,780. So once it gets past $1,780, I expect it to hit $1,800 real quickly. So right now, like the silver chart, it's hanging around the 200-day moving average, and it's waiting to go up.
You mentioned a fact about how silver could head up to 37.5 once it hits that $35 threshold. And last time I remember it hit $35 an ounce, it just went down. I think it was sometime last year, not early last year, but may have been March or April. I don't remember the time. So do you think that they're going to smack down the price of silver at that time? Because a lot of people are buying silver right now, and they want to smack it down once it hits that $35 threshold.
Last time it hung around $35 back in the fall, around September, October, and then they smashed it down. Unfortunately, the guys on Wall Street. So I believe the next time. Once they get to 35, I'm not sure if it will blow past 35 the first time, but I think eventually it will blow past 35 and go up, mainly because QE3 has been rolled out, QE4 has been rolled out, and despite what the Fed say, they're not going to end the QE program anytime soon. So when you factor those two things in, and plus the fact that the government going to continue to raise the debt ceiling, I think next time around it's going to blow past $35. May not be the first try, but the second or third try, definitely.
Yes, I do see silver spiking up, but I think it's probably going to be within the next few months. I don't know about that, though. Moving forward, I wanted to look at the oil market. I know that you're not the oil expert as John is, but I did notice a huge run-up in the price of oil, and I know that you guys did do an oil report. So I was curious to know what's going on with the price of oil. I mean, oil has shot back up to $93 a barrel.
Yeah.
Oh, go ahead.
I'm sorry. Yes, they did, and that was mainly due to short covering. A lot of the traders out there had a big position in the short position in the oil market, mainly because of the fiscal cliff. And once that so-called fiscal cliff got everted, then the traders covered their short, and that's why we had a little rally in the oil market. But overall, I think the oil market will continue to be in a trading range for in 2013, where the floor will be $75 and the ceiling will be around $120. This economy, then it will be in a stagflation for the year 2013, where there'll be high unemployment and high inflation. It's similar to what we had in 2012. I think we'll get more of the same in 2013. That's why I think silver is going to continue to be in a trading range. And a lot of the countries in OPEC do not want to see the oil prices go below, $80, $70, and especially in the U.S. Now they have a big boom in the shale oil industry. For them to be profitable, the price of oil has to stay high. So I think it's in their best interest if the oil price stays high, and I think it will stay in its trading range for the year 2013, unless Israel go to war with Iran and we start to see more and more turmoil in the Middle East, and that will cause a big spike in the oil price. If we have that, then yes, I think oil could blow past $120 and continue to go upward.
If that event were to happen, I think oil would be at $200 a barrel, in my opinion. But getting back to this oil discussion, I wanted to look at what happened before the election. It appeared that the Saudis were selling or were pumping all this oil to try to get Barack Obama elected. That's how I saw it. And have you noticed anything with what the Saudis are doing right now? I haven't looked at it. Do you think the Saudis aren't pumping as much oil, and that could be one of the reasons why the price of oil is going up? Or could it be dollar devaluation as well? I've noticed that the Dixie, or the dollar index, has gone lower.
It's a combination of a lot of factors. The Saudis have been pumping a lot of oil to try to keep the oil prices at a range where it's not too low or too high. Once the oil prices get way too high, it's not good for the economy. That's when the economy slows down, and that's what I don't know if you follow Jim Pavava on Financial Sense. He has a theory called the petrol business cycle, and what he said that if oil gets way too high, and that's when we're going to see the economy become sluggish and it start to slow down and contract, and that's when the oil prices start to go down, and then when our economy contracts, that's when the Federal Reserve roll out another QE, or the government rolls out a stimulus program, and oil prices goes up. You see another boom in the economy, and it continues to go up. So that's what happened in the trading range that we had between 75 and 120. We have the boom and bust in the business cycle mainly because of the oil prices. So yes, I agree with you. I think the Saudis are pumping a lot of oil just to maintain the oil prices. And, a lot of their revenue comes from oil, and a lot of the campaign promises and their social program, a lot of the revenue comes from the oil that they sell. So they need the prices to stay at a level so they can continue to roll out the social program and keep the crowd quiet.
Yeah, you did make an interesting point about Jim Paplava, the recession or the petro business cycle. There have been studies about whenever the price of oil goes up, you tend to have a recession. This has been happening ever since World War II, but there have been instances before that, even in the 1800s, as crazy as that sounds. But I wanted to get now into the topic of the debt ceiling. We were talking about this earlier. And it just seems that this is going to be maybe a repeat of 2011, but there were potential cuts at that time. This time around, I don't see any cuts that may come out of it. I mean, they're talking about this sequestration, but at the same time, the cuts are going to be minimal. It's only going to cut the size of spending. It's not going to totally eliminate this deficit spending. So I don't see anything good coming out of this. But what are your thoughts about the debt ceiling? Do you think that what Congress is going to do is they're going to raise the debt ceiling for a few months and then come back to the table, raise the debt ceiling again, and this is just going to be a disastrous cycle for businesses, and as a result they're not going to hire, and we're going to add more debt, and the dollar is going to be devalued as well?
Well, I think what's going to happen from the debt ceiling is the Republican want they don't mind raising the debt ceiling, but in exchange they want spending cut. They want real spending cuts. So what I think is going to happen is they'll roll out a bill. Yeah, yes, it'll have spending cuts, but the cuts won't happen until a decade down the road. And in exchange, I believe the presidents want to have unlimited power on raising the debt ceiling without approval from Congress, which is unconstitutional. And I wouldn't be surprised if he gets his way with that. And that's very dangerous because that means he has a blank check and an unlimited or a credit card with no credit limit, so he can borrow as much as he wants. He can make the budget deficit as wide as he wants, and no one can stop him. And that goes against the Constitution because we have that in place to checks and balances to prevent the executive branch from becoming too powerful and to prevent the legislative branch from becoming too powerful. So yes, I believe they'll make a deal. I don't think they'll shut down the government. I think all that is just entertainment, just to scare people and just to get the president to get serious about cutting spending. And there's a few people in Congress that really want to cut spending, like Rand Paul and Ted Cruz, but unfortunately there are only two people, and they're only a minority. The majority really don't want to cut anything. So, and they're not going to solve this unless they tackle entitlement, which should take up the majority of the annual budget. So if they cut everything else and doesn't touch entitlement, then nowhere they're going to cut the gap on their budget deficit. So I think it'll be interesting, and I wouldn't be surprised, like I said, if Obama gets unlimited power on raising the debt ceiling.
Yeah, you made a lot of points there, but when it does come to the spending cuts the Republicans are proposing, I've looked at it, it's only $1 trillion over 10 years, and we've been increasing spending each year around $150 to $160 billion since the year 2000. From 2001 to right now. So I don't even see real cuts by the Republicans, and I just see this as a total farce. So you believe that they're going to raise the debt ceiling, and there are going to be some fake spending cuts, in my opinion. So what would this do to the bond market, in your opinion, and then gold and silver? I remember in 2011 the price of gold and silver just went bonkers right after the debt ceiling passed. So do you see the same scenario? And do you see a debt downgrade happening this time around? Because I do remember a debt downgrade following the debt ceiling fiasco in 2011.
To address the precious metals market, I think it will explode to the upside once they raise the debt ceiling again. Because it's inflationary. I mean, they're spending more, they're going to print more because they have to borrow to make up whatever money they don't have to keep funding the war, the social programs, and the entitlement. So yes, I think the precious metal market will go bonkers again, like it did in 2011. And to address the issue regarding, what was the other question?
Well, I just said that we're going to have the debt ceiling go up, and we're not going to see real spending cuts like in 2011, and the whole situation was chaotic, and I believe that it's going to lead to another downgrade. Do you see another downgrade occurring?
Yes, I would not be surprised if we see another downgrade for our debt rating. And I don't believe anything will happen to the bond market, mainly because the Federal Reserve is manipulating the bond market and keeping the bond vigilantes on the sideline for now. Because they're the one that monetize most of the debt in its country now. It's not China or Japan anymore. It's the Federal Reserve that has the most treasury holding. So I don't see the Federal Reserve stopping their purchases of the bonds. So I don't think anything will happen to the bond market. I think the mortgage rate will continue to go low. I think the bond yield will continue to go low. So I wouldn't be surprised if the 30-year mortgage becomes 3%. Because what they're trying to do is create another mini bubble in the housing market. And it won't work this time because a lot of people are out of jobs, and inflation is kicking the middle class in the butt right now, taking up much of their purchasing power away from them.
Yeah, contrary to what the Keynesians are talking about. And then one last thing, though, when it comes to this debt ceiling hike. So you're saying that the rates will stay low. I mean, 2011, the rates didn't go up because Europe had a problem during that time frame. This time, I do see rates going up a tidbit following this debt ceiling fiasco because I don't see any problems in Europe as of right now. Even though I don't like what they're doing, I think that their problems have passed for the time being. So do you see then the interest rates going up once this downgrade happens, or you think that it will surprisingly stay low and maybe even go down?
I think it'll continue to stay low, mainly because the Federal Reserve are doing a good job keeping the bond vigilantes on the sideline. For the interest rate to go up, we need free market, and I think eventually that'll happen down the road in a few years. I don't think it will happen this year in 2013, but for now, I think because of the Federal Reserve continuing to monetize the debt, I think the rate will stay low. Maybe it'll tick up. That could happen, but overall, I think it'll continue to stay low.
All right, Mo, before I let you go, how can people follow your work at Wall Street for Main Street and also do business with Wall Street for Main Street?
They can go to our website at www.wallstreetformainstreet.com. Once they visit the site, they can sign up and get a free copy of our oil report that you mentioned earlier that me, Jason Burak, and John Manfreda, we all wrote this oil report back in the summer to help people who want to invest in the oil market. And if people want to have any consulting sessions or if they need any advice, they can go to their website and hit the Contact Us button and go to the page and send us an email, and we can help whatever services that people need. We can help them with. So www.wallstreetformainstreet.com.
Thanks for coming on again, Mo.
Thank you.